First off, to start the day, I'm generally noting key news events. So when I'm trading my funded accounts, I don't break any rules. And as far as data markers for the market, I'm kind of looking for key levels of resistance and support, which are denoted by these kind of purplish rectangular boxes I have scattered around here. Now I'm looking at it, this should have been a little bit higher going through there, but it'll work. So what are we doing? This is a scalping strategy. To get started, I guess we should talk about the chart. It is a 2000 tick chart using candlesticks, green up, red down, and utilizing a 21 period EMA, which you can see kind of this thicker white line going through price. And you can see it's kind of a spot where price reacts or oscillates through. On the outside, I have Keltner channels. And why do I have those? I have those to kind of show me the bounds of price. And we can see that throughout just this little window or time frame. What happened on Friday? Every time, if you look over at the far left where price escaped, it usually made a strong movement back, like here or here or here in the middle. And other than that, price is normally contained, normally almost just touching it. If you can see down here in the lower left, kind of over here in the far top right, and over here all in the middle, whether it be this bottom section or this top section. So that's kind of the chart. Now, as far as the system goes, it's based off of Al Brooks, and if any of y'all have been in trading long, you've probably come across the Al Brooks price action books or heard about them or heard about a system that utilizes his teachings. And there are a lot of guys on YouTube that break down these methodologies in detail with market examples and videos. They're free, so I'm not giving away anyone's system or trade secrets here. This is something I learned just through searching and watching and practicing with fake money before I got an account with OneUp Trader to kind of master and practice with some real money on the line. So as far as the trades go, we have two examples, and we're going to break those down right now. So to begin with, I have to identify what direction is generally the market, in what direction is the market moving, right? Like, what are the major flows for the day? Well, leading up to this time frame where this window is showing, the market was moving up. And it's still kind of generally moving up. We have these series of higher lows and higher highs working as the market kind of marches its way up. Had a kind of a strong bearish rally, almost looks like a news move on its own, but generally the market's moving up. So I'm looking for longs. I'm looking to buy the market and capture some kind of small profit within these larger moves. Now, the way this system generally works, there are a lot of different trade setups within the system, and depending on your experience and how good you are at reading charts and identifying patterns and so forth, you're going to have like kind of different setups you're going to want to be looking for, or that you're comfortable with, or that your experience will dictate that you should or should not take. So to the far right, we have kind of the bread and butter trade setup. This is something I always take. This is something I'm always looking for. And to kind of help us, I've marked with these numbers kind of these special areas where you see these twos. We'll talk about what those mean here in a second, but those are kind of marking like certain patterns that I'm looking for. And that pattern is, if I can get my drawing tool and get a line here. So the market's moving up, right? And we're looking to capture a move on the way up. So as the market moves up, I'm looking for a pullback, a correction. And some people call this a complex consolidation. Some people call this a two-legged correction. But in the terminology of these systems and within my system, I use second entry. So we're looking for second entry longs in a bullish market and second entry shorts in a bearish market. So we're in a bull market, we're looking for second entry longs. And what is that? Well, that is generally, this is actually a pretty good example here in the middle of the chart to find. We see these strong pushes up, the market's generally been moving up, and we're looking for some kind of two-legged pullback this 1, 2, 3 move back to continue up. So we have this 1, 2, 3. We have a first entry and a second entry. And those are demarcated by these moves down, counter trend, and then a break of a bar in the direction of the trend. So we'll go through that kind of slow right here. See, these numbers here are marking where those second entries are, and that'll kind of help us kind of stay together where I'm highlighting and talking about on this chart. So price is moving up, and we're looking for those second entries where these twos are, right? So price is correcting, and then it's moving up. We have a break of this green bar that marks your first entry. We have price correcting back down, forming a new low. And then let me get another line here. And where that bar breaks higher and forms a new high, that would be our second entry. So that would be a second entry right there, right where the number 2 is, and where we'd be looking for an entry. I didn't enter here because we have congestion, but we'll walk through an example that I actually did take. So if we look over here to the far right, market's moving up, we're looking long, right? We're looking for second entry longs. We can cheat and look here at the number 2, but you know, if we put our hand to the far right of the chart, we can't see that yet, right? So we're looking for price to correct. So we see price comes down. So maybe you can follow my cursor. It's moving down, and then it breaks this green bar right here on this bearish bar. It broke higher first and then broke down. So that's our first entry because it broke higher. Right? It broke higher by a tick, and then it came down, forming a new low. It almost broke higher, forming a second entry for us here on this bullish bar right here, but it kind of had a double matching top. It came back down, formed a new low, and then formed a second entry once it broke that bar, which is coincidentally where I took my entry. So how am I making my entries? So we're not taking every second entry long or short that we see, right? We have to have some other kind of entry criteria to kind of add confluence and give the trade a better chance or percentage of success. So what are those? We're looking for entries that coincide or have confluence with a key entry point. And those key entry points are going to be the 21 period EMA, or any kind of channel line or trend line that you have marked. And here we have a good example of 2. We have price forms the second entry above the EMA at a key entry point, which is, you know, check. It's bouncing off this trend line I have starting from here, marking that low, connecting that low, and now we have kind of a third reaction, which is a really good sign that price is going to probably march up and try to retest these prior highs, right? Which is exactly what it did. As far as the signal bar goes, which is the bar that creates the second entry, we need it to be favorable in our direction, meaning if we're looking for longs or second entry longs, we need it to be a bullish green bar. The stronger the close, the better. This one happened to be as strong a close as you could get, right? It's kind of edge to edge going up in one direction with no big tails on it, meaning those lines below the solid body of the candlestick. And once that formed, you know, we had a second entry long form at a key entry point, the EMA and the trend line, and we had a good signal bar. So I waited for it to close and I put my entry there, right? Now, as far as stop goes, I usually have it 1 tick below the signal bar. So 1 tick below the low of this green bar right here, kind of at the 4953.5, if you can see the prices over here. Now, because that is such a big bar, I opted to only trade 1 contract. I have a $25,000 account. I have 3 contracts during the evaluation to trade, and normally I like to keep my risk maximized at 2 points. That's what most of the systems dictate. That's what I use. So because this bar is almost, well, it is 3 points, instead of going for 3 contracts, I opted to trade 1 to kind of control my risk in case it failed. I didn't want to have 3 contracts lose for 3 points. That's not going to be good for me, not going to be good for my account balance, not going to be good for my trailing threshold. So I opted for 1 contract. As far as profit goes, I'm usually looking between 4 to 8 ticks, or 1 to 2 points here in the ES, the mini S&P 500. And I drew a fib extension, which is basically just a projection to give me an idea where price could go. I'm looking at the prior high swing highs, which is up here. I'm looking at this zone that's been created. I'm looking at the Keltner channel, and I have another point of confluence with the 61% and the 100% point extensions of this Fibonacci extension. If that doesn't make sense to you, I would strongly encourage you to research about Fibonacci extensions and how you can use that to project profits, and lining that up with other areas of confluence, whether you're looking at prior swing points or high volume nodes, or where price could potentially react. But here we had a good example. I figured price was going to go to retest these prior highs. I had a 100-point extension, or some people call it a measured move, like of this 1, 2, 3. We had a move up, it came down on this bearish bar. I'm looking for a measured move of that distance from here to here to continue from this low. It did basically exactly that. I have this Keltner channel, which it basically touched it and then reacted. So I have the prior highs forming confluence, I have the Keltner channel forming confluence, and I have the Fibonacci extension forming confluence. I opted to take 2 points because I didn't want to encounter resistance and have a strong reaction like we did previously. So I figured 2 points was a safe exit, and that's what I took. Maybe I could have squeezed a little bit more, but I feel pretty comfortable that we got a good profit on this, considering the risk. Now, let's go down to another example. So, not only am I looking for second entry longs in the direction of our overall market direction, which is up, our bullish market, I'm also looking for second entry short failures, right? Which is going to just be the inverse of a second entry long. So we have a new low formed down here. We have a break higher. We have a break of this first bearish bar with the second bearish bar, and prices form a new low on this green bar, and then they correct again, forming a new high, and then they did break, creating a second entry short, which is, you can kind of cheat and see by this red number 2 right on this bar. Now, it broke, forming that second entry short, but overall the market is moving up, right? Like, we're looking for longs. We don't want to just go short when the overall flows of the market are pointing that buyers are more interested than sellers, especially because we can see what happened here with prices marching up in basically a nonstop direction. So we had a second entry short, and it kind of failed, right? It didn't move and form a new extreme. It didn't continue. In fact, it just kind of rejected and moved in the opposite direction. In fact, it moved in the opposite direction with a very strong bullish bar, indicating that, hey, the buyers are in control right now. So this failed. We have a strong signal bar. I opted to enter. And again, as far as risk, because this is such a big bar, 1, 2, 3, about 3.5 points, I opted for 1 contract again to manage my risk. I entered 1 tick above the signal bar. I had my risk 1 tick below. And again, I was looking for 2 points. Why? Because we had these prior highs up here. We had the Keltner channel. And again, I had a Fibonacci extension forming there. I took it exactly at the 100%, which lined up perfectly with the outer Keltner band here, of the Keltner channel, and was right before I expected to encounter some resistance. Now here we didn't really encounter any. It just kind of came up and met a little bit of resistance before resuming in kind of another measured move you could draw. But another point I should add for context is what is this line here, right? Like, what are these lines? Well, these are just trend lines. This is a short-term trend line. This is a little bit longer to kind of find those key entry points, right? And this is kind of happening kind of off a key entry point. I have this trend line. We broke the trend line, meaning this kind of reversal, this correction, this bearish move has kind of come to an end. We bounced, we broke that trend line, we came back down to retest it, and then I expected price to move up. And we're above the EMA, we have a strong signal bar, and that's what prompted me to take this trade. So to recap, we have a second entry long example, and then we have a failure of a second entry, both in the overall direction and in accordance with the major flows of the market. And that's kind of a very nutshell encapsulated approach to the system I use and have been using. But if you want to find more information, it's out there, it's readily available. And I encourage y'all to practice it with fake money and see how you do, and then work your way up to getting an evaluated account. And good luck.